start reading. Yeah, just go ahead and read this. Okay, so we are welcome everyone, those that are tuning in from YouTube and Facebook. We are in the middle of a coaching session for the strategic day trader members, and the question is that came up is, how do you determine the market bias in the morning? I have a very simple but effective way to do it, and it's in a step-by-step process. The first thing I do is I review the daily and hourly charts of the QQQ, SPY, Apple, XLF, and SMH. To ensure there is no conflict. If there is conflict, expect choppy, sloppy trading with not much follow through. So what that means is I have the QQQ, which is the tracking ETF for the Nasdaq 100, the SPY, Apple, XLF, which is the ETF for the financials, and SMH is the ETF for the semiconductors industry, all in a watch list. And I don't really review each and every one of them. I just make sure that they're all gapping up or they're all gapping down. What I don't want to get is, let's say the semis up, semiconductors industry, the SMH, or the Qs are up but the SPY is down. Because if I have that, if there is conflict like this, then I would expect to get choppy, sloppy trading with not much follow through. Now, if I don't see any conflict, if I see that they're all, and most of the time, I would say 80% of the time, maybe 90% of the time, they're all going, they're all in sync. Okay. If I see that they're all in sync, then I just review the daily and the hourly chart of the QQQ, and I treat it as though I look at it the way I would any other stock. And if it's bullish, then I say bullish. If the charts look bearish in a downtrend with a declining 20 above, right? Then I say, okay, bearish. But the thing is, the market usually gaps in the morning. So the first question after I make sure that there's no conflict, the first question is I ask myself is, based on where the market is opening or gapping to, what should my bias be? Okay, based on where the market is gapping to, what should my bias be? If there is no clear bias, if the answer is bullish, then I'll be bullish. And we'll look at charts in just a second here. If the answer is based on where the market is gapping to, it may be gapping under support, let's be bearish, then be bearish at the open. If the answer is it's not clear, then the next questions are, then what would the market need to do in order for me to be bullish? And what would the market need to do in order for me to be bearish? So in the beginning, when I was just learning how to trade, I used to review the market in the pre-market, and I would say, well, it's not clear. Let me just wait and see what the market does after the open, and then I'll go with it. And that's not right. What you want is you want to be able to establish a game plan and come up with, if this happens, this is what I'll do. If that happens, then that's what I'll do. Before the market opens, while you still have your objectivity. Does that make sense? So if the answer is it's not clear, then you gotta come up with another question, which is, okay, if it's not clear, then what would make it clear for me? What would make me bullish? What would the market need to do in order for me to be bullish? Oftentimes, for me, it would be for the market to clear resistance or for the market to break support. Then I'd be bearish. Okay? Now answer both questions, and you now have a game plan for either direction the market decides to go in. Note, if the market is opening flat, then stick with yesterday's trend. Review previous day's trend and come up with a bias based on that. So that's my step-by-step process. So for today, for example, The market was opening, what was it doing? Was opening flat. Now this is the 15-minute chart, but here's the hourly. It doesn't matter when it's when the hourly is not, when it's small bars. I often go to the 15-minute to tell you the truth. But look, I said if it's opening flat, then stick with yesterday's trend, and if the trend is up, then be bullish. Does that make sense? And the market today was bullish. Now you don't have to be all out bullish because the market was also at the prior top at resistance. So the bias should have been today. Now I didn't do the open in the room today, but the bias should have been mildly bullish today. Does that make sense? Now let's say I wasn't clear. Let's say the market was just opening again. If it's opening flat, then go with yesterday's trend. Look at yesterday's trend, and if it was bullish, then be bullish. But let's say I wasn't clear, for whatever reason, I wasn't clear. Then the second question is, what would make me clear? What would the market need to do in order for me to be bearish? And in this case, I would go to the 15-minute chart because nothing on the hourly would make me bearish, right? The market could pull back to here and I would still be bullish because it would still be in an uptrend at support. But if I want to be, I might, but if I wait $2 for the market to drop $2 before I turn bearish, I mean, it would be too late, right? So in this case, you can use the 15-minute chart to just get a little tighter. And now we can see that the market was trending up on the 15-minute chart. This is yesterday's chart. So if the market were to break under the base, we would no longer have higher highs and higher lows. And in this case, I would turn bearish. Does that make sense? Otherwise, bullish. Otherwise, bullish. Why? Because I said if it's opening flat, then go with yesterday's bias. Whatever your bias was the previous day, then stick with that. Does that make sense? So it's simple. It's not easy, but it's simple. Generally speaking, you want to go with the gap unless you have reasons not to. Unless you have a reason not to. Now, if the market is gapping into resistance, like it was here, then okay, it's a bullish gap, but I would only play it long on a pullback because I know that playing long on a big gap into resistance is not very prudent, is not very smart. So it would only be even though I was bullish yesterday, but on a pullback only. And as you can see, the market didn't really go at the open. It first pulled back and then eventually it went. But even during the day after the open, you want to keep an eye on again the banks, which were on fire yesterday, Apple, which was actually bearish, and then check this out. 11 o'clock, 10:45 is when the market bottomed. Look, just want to show you. Apple, look at this, guys. 10:45. See this? As soon as Apple bottomed, that's when the market actually got bought. So you want to make sure they're all in sync. Now, Apple used to be by far the most dominant player. It still is, in my opinion. But Apple used to make up 15%, 15.5% of the QQQ. It no longer does. It makes about, I think, 6%, makes up about 6%. But you also have Amazon, you also have Google. I still stick with Apple to this day, and I don't worry about the rest of them. The most important stocks for the Qs would be the FANG stocks, obviously, but the most important of those, in my opinion, is Apple. Okay, so that's kind of my simple yet very effective process to determining the market bias in the morning. If you are, if you want to see it in action on a daily basis, then make sure to join the Strategic Day Trader. Currently, we have an offer going on where you can actually join us for $49 for 30 days. Okay. All right, so we'll go ahead and stop the recording. I hope you enjoyed today's video. We will talk to you soon. I'm actually going to do another video in just a little bit.